Let's head to the markets and today's corporate results with Ed Boyd. Ed, plenty of companies reporting. Let's start with CSL. Great result, terrible on the stock market.
It had a really tough day on the stock market, Ross. The shares got crunched due to weaker than expected profit guidance. CSL's the third largest company on the stock market, and it's the biggest company to report so far this profit season. The vaccines and blood products maker had a pretty good year on paper, lifting its net profit 20% to about $2.6 billion. That was due to higher revenue thanks to a strong result from its CSL Behring business, which is based in the United States. So the healthcare provider increased its underlying profit. It will pay a dividend of $1.45 per share. But shareholders appear to be pretty unhappy with the profit guidance, which is expected to be still about 10% higher next financial year. The share price today, it dropped below $300 a share. That's its lowest level since early July and the biggest fall, as you say, Ross, this year.
There's a big fall there. So what about James Hardie, which is the Aussie-US building products maker? It also had results out.
Yeah, James Hardie, it was its first quarter results. They make fibre cement products for the construction sector, things like cladding, panels and facades. It beat profit estimates in the first quarter, lifting net income 2%. Net sales for the business, it has divisions in North America, Europe and the Asia Pacific, increased 4% to just under $1 billion. Sales lifted in Europe and North America, but the Asia Pacific sector struggled despite raising prices here by 7%. There's clearly weaker demand from the Aussie housing market and home renovators here. And here's a look at the shares. You can see James Hardie, it bounced around a bit today. Mid-morning trading, it almost broke even, but it finished the day down just under 3%, Ross. And its half-year results, they'll be released in 3 months' time.
Okay, but I did notice one stock that did take off today is the online furniture retailer, Temple & Webster.
Temple & Webster was one of the best companies on the stock market today. Here's the results. Revenue jumped about 26% to nearly $500 million. That's a record. But when you look at the retailer's net profit, you see that fell almost 80% to just $1.8 million. And that's because the e-commerce company is reinvesting money back into the business. And it wrote down the value as well of its investment in a startup called Renovai. It doesn't pay dividends, but here's the share price. You can see it soared sharply. Sales have jumped 26% in the first 6 weeks of trading in this new financial year. So like JB Hi-Fi yesterday, it seems Aussies are spending their tax cuts in retail stores. So they also did announce a $30 million share buyback. And they've also hired a new CFO who's going to begin on the 2nd of September. Cameron Barnsley from Morgan Stanley's been picked for the job. So Ross, Temple & Webster up almost 24%.
Seriously, 23% in a day. That's shooting the lights out, I've got to tell you. All right, the jobs market is tightening up right now. Also out today was the employment site Seek. I'm presuming that might have been not so good as Temple & Webster.
Not as good as Temple & Webster, unfortunately, for Seek shareholders. It actually had a pretty tough year. Sales revenue dropped 6% to about 1.1 billion Aussie dollars. And that's because the unemployment rate, it has been slowly rising in Australia. That's caused employment companies to cut back on the number of job advertisements that they require. Its adjusted profit fell 33% to about $177 million. It also booked a $141 million impairment charge on its investment in the Chinese jobs company Zhaopin. So on a statutory basis, Seek actually reported a loss of about $101 million. Here's a look at the shares. Look, Seek was punished today by investors, one of the worst performers on the market today. The revenue outlook for next year is expected to be flat and could potentially be lower than FY24. It also cut its dividend by 7 cents per share, down to 16 cents, sorry. So Seek shares 6.64% down today.
All right, Ed, so that's the whole profit reporting season. How did the overall market go?
Overall market was pretty flat this morning when it opened, hardly moved around the whole day. Those wage numbers basically came in as expected, so the market didn't really react to those. Healthcare sector slumped 3%. That's really due to CSL. Telcos were down 2%. Banks, energy stocks and property REITs were the top performers. ASX 200 finished the day up just 13.1 points. Packaging company Aurora, well, that was up sharply. It rejected a non-binding takeover offer from US private equity group Lone Star, which offered about $3.4 billion for the company Aurora, which will release its results tomorrow. You can see they were up almost 20%. Metal recycling company Sims jumped as well after agreeing to sell its UK metal business for about $385 million. Annuities company Challenger, it reported its full year results today, lifted the dividend and increased its assets under management, so it did well. Gold miner St Barbara was up too, and retailer JB Hi-Fi, it surged to a record high after its profit results yesterday. Medical company Nanosonics, that was dragged down by CSL. Gold miner Westgold slumped after rising pretty sharply yesterday. The lithium miner Pilbara Minerals, it dropped again. Financial services company Netwealth slumped after posting its full year results and missing its consensus estimates. And competitor Hub24, that was sold off too, down 3.4%. And just to finish up, tomorrow, the biggest company on the market, Commonwealth Bank, it's going to report its full year profit results. Last year, CBA posted a record profit of $10.2 billion. This year, it's expected to be a bit less at around $9.8 billion. Analysts are expecting to see a slightly higher level of home loan arrears, continued margin pressures and rising bad debts. Competition for home loans obviously remains high. Lots of smaller banks have been trying to undercut the bigger players like CBA with cheaper rates. The dividend's expected to be flat at roughly $4.50 per share. And here's the shares today. You can see up about 1.5% at around $132, Ross.